People are always a little surprised when I talk about gold. They look at me and think, Bill, you work in technology, you understand money, you must love gold. You probably think it is the ultimate safe asset, the thing everyone should run to when the world feels scary. I do not. I never have. And I want to explain why in a very direct way because I think a lot of people are about to learn a harsh truth about gold, a truth that could cost them a lot of money and a lot of time. I do not want you to be one of them. So I'm going to be honest with you, maybe brutally honest. This is not a sales pitch, this is a warning. Years ago, in an interview, I was asked about precious metals. I mentioned that I had once bought silver and done well with it, but I added something important about gold. I said gold is tough because it is so psychological. That is still exactly how I see it today. Gold does not generate cash flow. It does not invent anything. It does not solve a problem. Its value is driven mostly by what people feel, by stories and fear and speculation. You are not buying a machine that produces profits. You are buying a metal in a mood. That is the core of the problem. Let us make this simple. Imagine you have $2,000. Choice one, you buy 1 ounce of gold. Choice two, you buy $2,000 worth of shares in a productive business. You take the gold, put it in a safe, and walk away. 10 years pass, you open the safe, you still have 1 ounce of gold. In all that time, it has not created one job, one invention, or $1 of cash flow. Maybe the quoted price is higher, maybe it is lower, but the metal itself has done nothing for you. Now look at the productive business. Over those 10 years, it has been working. It has been building products, serving customers, upgrading technology, hiring people, improving processes. It may have paid dividends. It may have reinvested profits to grow. That is compounding real things getting done in the real world. At the end of 10 years, you're holding a shiny object that sat in the dark or ownership in something that spent a decade improving and creating value. Which one do you really want to own? For me, as someone who built a company and spent decades around innovation and capital, the answer is obvious. Productive assets win over time. But I know the usual argument from gold fans. They say, Bill, gold is not about growth. It is insurance. It is protection. It is a hedge against inflation and currency collapse. It is what you hold when you do not trust governments or central banks. I understand that argument. It feels emotionally gratifying. It reaches back into history, into stories of gold coins and collapsing empires. But here is the harsh truth. Gold is not a reliable long-term hedge against inflation, not in the way people like to imagine. Look at history instead of slogans. In 1980, gold hit about $850 an ounce. Inflation was high energy, prices were spiking, and geopolitics were tense. A lot of people were sure gold would just keep going higher. Then what happened? For the next 20 years, gold mostly went down. By around the year 2000, it was closer to $300 an ounce. That is roughly a 65% drop from the peak. Were prices in the economy flat between 1980 and 2000? No, we had plenty of inflation. The cost of living went up, yet gold, the supposed perfect inflation hedge, lost a huge part of its value if you bought near that top. At the same time, people who invested broadly in productive businesses in the stock market saw very strong gains over those decades. That is not what a reliable hedge looks like. To be fair, there were periods when gold did very well, from the early 2000s to around 2011, gold rose from roughly $300 to around $1,900 an ounce. That was a time of shocks, the dot-com bust, terrorism wars, the global financial crisis. Crises tend to push people into assets they think are safe, and gold is one of those. But after that peak, gold fell sharply again down toward roughly $1,050 to $1,100 a few years later, while the stock market recovered and then went much higher. So what do you actually see if you zoom out? Gold has short periods where it spikes, often in times of fear, then long periods where it falls or goes nowhere over very long stretches. Its real return after inflation is low and inconsistent. Meanwhile, broad ownership of productive businesses has delivered much stronger long-term gains in most historical data. Sometimes gold shines, sometimes it sinks. It is not a smooth, dependable shield. It is a volatile, psychological asset. That is harsh truth number one. Harsh truth number two is that gold has real costs. If you own physical gold, you do not just toss it in a drawer and forget about it. You need storage. That might mean a safe deposit box, a private vault, insurance. All of that quietly drains money away every year. With good businesses, it is the opposite. They can pay you through dividends or growth in value. You're not paying to keep your shares in a vault. The company is paying you for the capital you provided. Gold charges you to sit still. Productive assets pay you while they move over 10, 20, 30 years. That difference compounds. Harsh truth number three, you cannot value gold the way you value a productive company. When you look at a business, you can examine earnings, cash flows, assets, markets, technology. You can estimate what it is probably worth based on what it produces and how it can grow with gold. There is no cash flow, there is no internal generator of value. It is worth whatever people feel like paying at that moment. That is what I meant when I said gold is so psychological. You are not analyzing a machine that creates output, you are trying to read crowd emotions. When an asset depends mainly on mood, you are not really investing. You are trying to time human feeling. That is speculation. Can speculation make money for some people? Yes, but it is a very different game from owning productive assets for the long term now. I want to move from theory to practice. I want to point to what I have actually done with my own money over the years. If I believed gold was the best way to preserve and grow wealth, you would see that in my balance sheet you do not. Most of my personal fortune is managed through my family office, Cascade Investment. Those investments include large stakes in companies, real estate, farmland, clean energy projects, and other productive assets, not stacks of gold bars. The Gates Foundation Trust, which funds our work in global health and development, is also mostly invested in stocks and stakes in operating companies. Again, not in gold piled in a vault somewhere. That is not an accident, it is a deliberate choice. I also have made it public that I plan to give away almost all of my wealth. I talked about a rough timeline about 20 years to donate virtually everything, and the foundation expects to spend enormous amounts between now and the middle of the century. Those future grants depend on one simple thing: the assets that fund them need to produce returns, they need to grow, they need to generate cash flow that we can recycle into vaccines, education, climate work, and other efforts. If I trusted gold as the best way to do that, I would be buying gold instead. I'm backing businesses, technologies, and projects that actually create value, from software to clean energy to new tools to help solve big problems. That is my real world vote. Time is a big part of this. There's a quote of mine that gets repeated a lot. I once said that we always overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the next 10. That applies perfectly to investing. In the short term, markets bounce around, prices can shoot up or down on headlines, on fear, on excitement. Gold can look like a genius move for 2 years, then look terrible for 10. But over a decade, what really matters is productivity and innovation. That is where progress shows up. New software, new medicines, new ways to generate energy, new tools that let people work smarter. Those long term trends, not the short swings, are what build real wealth over time. There is another idea I like that people sometimes attach to me, even if the wording changes: save like a pessimist, invest like an optimist, be realistic about risk, have cash for emergencies. But when you invest, have faith in the ability of human beings to solve problems and create value over the long term. Gold is not a bet on problem solving, gold is a bet that nothing will work and that all you can do is hide. I do not think that is a good bet. Now let us come back to some very simple math, because math is not emotional. Imagine you had $100,000 in 2011 when gold was near $1,900 an ounce. You decide to put it all into gold. You get roughly 53 ounces. Fast forward more than a decade, with gold around $2,000 an ounce. In this example, your 53 ounces are worth about $106,000. That is roughly a 6% total return over more than 10 years before you account for inflation or storage costs. If instead you had put that same $100,000 into a broad index of United States stocks and reinvested dividends, your investment would be somewhere around $350,000 or more. Your money more than tripled, even if you adjust the dates a little. The pattern holds: productive assets strongly outperform gold over that long period. Gold gave you a small gain, stocks gave you a very large gain. Take a longer stretch. Imagine $10,000 in 1980, put it into gold and hold it to today. You might end up with around $23,000, depending on the exact dates and price series. Not terrible, but not very impressive over more than 40 years. Take that same $10,000 and put it into a broad United States stock index in 1980. Reinvest your dividends, and you end up in the range of more than $1 million in many estimates. Gold gave you a small stack, Productive assets gave you a life-changing amount. Those are not my feelings. Those are the long-term numbers. Now add one more harsh truth. Taxes in the United States, profits from physical gold are usually taxed like collectibles with a top rate up to 28%. Long-term profits from stocks usually face capital gains tax of 15 or 20% for many investors. So even when you win with gold, you may give up more of that gain to taxes than if you had made the same profit in productive assets. And with stocks, if you hold them, donate them, or pass them on, there are legal ways to reduce the tax hit dramatically. Large philanthropic efforts like mine depend on that structure. Gold does not come with the same flexibility. Then there is liquidity and friction. Selling a stock is often as simple as clicking a button. Selling physical gold can mean finding a buyer, paying a spread, maybe having the metal tested, handling security and shipping. Those frictions are real, even if people do not think about them when they are buying. The last piece I want to talk about is psychology, because that is where gold really lives. People often buy gold when they are scared of inflation, scared of governments, scared of markets, scared of technology and change. I spend a lot of my time thinking about big risks, pandemics, climate change, jewel shocks. I have helped fund pandemic preparedness and climate innovation because I worry about worst case scenarios. But when it comes to investing, fear is a terrible strategy. Fear tells you the world will only get worse. Fear tells you nothing will work. Fear tells you to freeze, to bury your capital in something that does not move, to wait for disaster. My experience tells me something different. Over and over, I have watched people create unbelievable things. Software that seemed impossible, vaccines that saved millions of lives, new energy technologies that were science fiction when I was young. That does not mean there are no problems. It means the long-term direction with all the ups and downs has been progress. When you put all your faith into gold, you're betting against that progress. You're saying you think failure will win and productivity will lose. I do not believe that, and I do not invest that way. So let me be clear. Gold is not worthless. It has uses in industry, in jewelry, and in certain extreme situations, it can act as a store of value for a while. In a handful of extreme cases like hyperinflation or a complete collapse of a local currency, having some gold might help preserve purchasing power. But those situations are rare and usually temporary as the core of a long term wealth strategy, as the place where you park a big part of your financial future. Gold is a very weak choice. The long term data shows that. The opportunity cost shows that. My own portfolio and the way I fund philanthropy show that. Right now, gold has recently been near record highs again. It had a huge run as people worried about inflation, debt, and jewel risk. Central banks have been big buyers. Headlines have been loud. That is exactly the kind of environment where psychological assets can overshoot. And if history is any guide, when the mood shifts, when fear cools even a little, gold can fall hard and then sit flat for a long time. So here's my harsh warning. Gold is not going to save you. Gold is not going to build your future. Gold is not a magic shield. If you overload on gold at high prices, there is a real chance you will see that position drop 20, 30, even 40% at some point, while productive assets recover and move ahead. And then you will have learned the truth. I'm trying to give you right now, but in a much more painful way. What should you do instead? I cannot tell you exactly what to buy. That depends on your situation, but I can tell you how I think. I focus on assets that create value, companies with real products and real customers, technologies that solve real problems, projects that increase productivity. I think in decades, not days. I care more about what the world will look like in 10 or 20 years than about what the price of anything will be next month. I accept that markets are volatile in the short term, but I try to align with long-term trends in innovation and growth. I save with caution, but I invest with optimism. And if I hold anything as insurance, it is a small piece of the overall picture, not the center of it. If this message made you pause before throwing a large part of your savings into gold, that is exactly why I said it. I want you to think about what really builds wealth. I want you to think about opportunity cost. I want you to look at the actual numbers and the actual behavior of assets over decades, not just at fear-based stories. If you know someone who is obsessed with buying gold right now because they're scared, share this with them, talk about it with them, ask them if they have looked at the long-term comparisons between gold and productive assets, ask them if they're investing in the future they want or just in fear, And if you want more honest, no drama discussions about money, technology, and the future, stay tuned and stay engaged. Whatever you do, remember this: the best investment you can make is not in metal that just sits there. It is in human beings solving problems, in businesses that create value, in innovations that compound over time. Gold is shiny. Productivity is powerful. Choose power over shine. That is my harsh truth about gold, and I hope you will listen to it now instead of learning it the hard way later.